To defend the Baltic Dry Index, Simon Constable of the Wall Street Journal and co-author of the,
The
Wall Street Journal Guide to the 50 Economic Indicators That Really Matter, from Big Mac to Zombie Banks.
Zombie banks, like the ones you used to work for.
Now listen, why don't you show the viewers...
This is a not really a scale model, but it's a dry bulk ship that would haul things like coal and iron ore and wheat and things like that across the oceans, and that's what they look like, except massively bigger. They cost about, $25 million each.
Right. Now, there's an index called the Baltic Dry Index,
there is.
which is a proxy for global trade. Is that a fair?
It's a bit too simplistic to say that. What it measures is it measures the cost to haul freight across the world's oceans on basically on about 20, a few more than that, but about 20 key routes. And there are 4 classes of ship. The mid one being Panamax,
right.
Okay, which is a tad bigger than this great thing, which I love.
But now you can put it down. I think people get the idea.
People get the idea. You put the cargo in
for
there.
A number of years, economists and market pundits like yourself have touted the Baltic Dry Index is a good proxy as to the direction of global trade.
Yeah, and the reason for that is that when you're hauling iron ore and coal, you're going to make it into something else.
Right.
So that if people are not buying, but renting the ships, it bids up the price, and then that's an indication that there's going to be more manufacturing, more smelting of steel in the future. So that's a good thing in general. But then it went wrong, and it went wrong for 2 reasons.
Well, you're not even letting me speak, but go ahead.
Well,
why don't you tell people?
No, you shouldn't speak. You shouldn't speak. You don't have a hat. You don't have a boat.
Okay, so
I do.
Tell them why the Baltic Dry Index went wrong.
There was some irrational exuberance. You may have heard about this in the ordering of new vessels that looked a heck of a lot like this, and that happened in the run-up to the financial crisis.
Right.
On top of that, you got government interference, and this time it was the Chinese government interference, and they decided that it wasn't right that you had shipyard workers in China. Sorry, there's a lot going on the side there. There's a bit of a fight over here. There wasn't enough activity in the shipyards, so that they would subsidize the shipyards, and they had been pumping out ships. So basically, you've got the world awash with things that look like this. Can you see that?
Right.
They look like this, but a lot bigger.
Okay.
And that's why it went down.
Right.
Nothing fundamental.
Right. Okay. So if investors were misguided enough to be listening to your Baltic Dry Index for the last couple of years, they would have been getting wrong signals.
Well, in my book,
Yes.
The Wall Street Journal Guide to the 50 Economic Indicators That Really Matter, we point out that the fleet has to be relatively stable.
Right.
Otherwise it doesn't work. And the fleet hasn't been relatively stable. So if you were watching really closely, like you should have been, like a good schoolboy or a good schoolgirl, you wouldn't have missed this.
Okay. Why can't investors just look at other indicators, maybe like the stock price of a Federal Express, what FedEx is saying, what the transport companies, logistics companies are saying, as a better proxy than the Baltic Dry Index?
Well, that's one. You're saying look at something else. The reason we got 50 in the book is because you need to look at 50, more than one. Have
you promoted the book enough times now?
Maybe.
Have you promoted the book?
Maybe not. Maybe
Anyhow,
not. Anyway, what I was saying, what you've got to hear is that this thing is coming back to life around about December. So starting December, it's probably going to be okay. And if it's not, we'll think of another reason.
Now, is that a fisherman's cap?
It is. That's why it's the fisherman. It's the sailor cap with the boat.
Okay.
Get it? Do you get it, dude?
I'm surprised you didn't bring the book on to tout the book some more.
You can actually read this in Barron's. Barron's.com. Barron's.